I went to my bookshelf and I took off some investing books. You have The Intelligent Investor, an investing favorite by Benjamin Graham, and Security Analysis, also by Benjamin Graham. You have The Snowball by Warren Buffett, and One Up on Wall Street by Peter Lynch. So, of all these books that were on my shelf, which is my recommendation for you, the investor? Oh my, those are looking pretty thick. Except for that one. Let's reorder these books. Security Analysis is just extremely detailed, and look at the thickness of that book. It looks pretty new because I have barely touched it. It's just too much information. The Intelligent Investor does a great job of going over some nitty-gritty details. The Snowball by Warren Buffett basically tells you that you need to buy good companies at a fair price and be in the market for the long run. Of course, all these books can be yours by clicking on the link in the description. But the book that I recommend most to you, the investor, One Up on Wall Street. I think that Peter Lynch is the most honest of all the investors. He tells it like it is. He's not so concerned about ethics, being nice. He just wants to take $1 and make it into hundreds. Of all the books I mentioned, Peter Lynch is the thinnest, so you know that's the one you want. Click on the link in the description. But with all investing books, most of these books have that do as I say, not as I do mentality. What do these investors say about diversification?
Diversification is a protection against ignorance.
Diversification, that's for idiots.
Then I think that diversification is a terrible mistake.
If diversification is for idiots, why does Berkshire have over 40 positions in publicly traded stocks and over 60 companies owned outright? If you looked at this list, would you say that this is not diversification? You have furniture, cowboy boots, food products, batteries, aviation companies, insurance companies, luxury companies, candy companies, paint companies, and Dairy Queen? You could be saying that he isn't diversifying in any one sector. But if you look, he's got AbbVie, Merck, Bristol-Myers, Iogen, and Johnson & Johnson, just to name a few. That's a lot of diversity in one sector. Berkshire's rocking furniture, real estate, telecommunications, credit cards, and many more. Even Mark Cuban, who says that diversity's for idiots, has an endless scroll of companies that he has ownership in.
Diversification is a big mistake. I call it diversification.
But what did Peter Lynch do for his own portfolio? According to the internet, Lynch held as many as 1,400 stocks at one time. How's that for diversification? I will say, out of all the yahoos who push investment advice, I do like Peter Lynch the best. He didn't care what your company did as long as it made him money. He'd be sure to tell you to never invest in a cure because that would never pay out forever, and invest in companies that sell useless luxury like Louis Vuitton, cause you know the ladies will be paying those high prices, and so will Mark on YouTube. Subscribe and click on the link in the description so you can be ruthless and diversify as well.